Hi guys, welcome back to the channel. Today I want to discuss about the number of indicators, because when most traders begin their trading career, they fall into the trap of believing that the most indicators, the better it's going to be, because they believe that you need to have as many as 5, 7, 10 indicators in order to find the hidden signal that no one is seeing but you are going to see, and so that you can buy or sell at any given point in time. This is absolutely fair, because when you are not an expert, you believe that if you surround yourself with the most tools available, then you are going to be reassured into your decisions, so that every tool can support you, can better support your reasoning, your analysis, and so your decision. But the truth is that it is not true, of course, because let's have a look at this chart. For example, it's just a euro US dollar chart, and it's on the 1 hour time frame, and with these indicators I'm using 6 indicators. Okay, 1 2 3 5 4 6 indicators. I can barely read the price action because it's all a mess. It's a total mess. I cannot predict at any given point in time. I cannot predict where the market is going next, because at any given point in time there's going to be one indicator that says buy, another indicator that says sell. So what I'm supposed to do? Trading in this case is pretty much like gambling. So at any given point in time you just take a gamble. You take a gamble and say, okay, I believe more this one and this one, but yeah, this is kind of weak, so I don't trust this time, but maybe the next time. So you don't have anything that you can rely on a solid basis and consistently, because you are not learning anything. You are just taking each trade singularly and doing some sort of weird reasoning with the indicators and the way the indicators look at that specific moment. But the reality is that in this case you are not gonna make any progress in your trading career, because it's just a total mess. It's a total mess, and it is true that at any given point in time you cannot predict where the market is going. Okay, so by looking at this chart, well, first of all, as I said before, I can barely see the price action. So how am I supposed to be able to predict that let's say this point down here the market will go up? There is no evidence. I don't see anything that can tell me, okay, the market is probably, this downtrend is over and the market will likely go up. There is no evidence, and all these indicators are just saying, okay, now sell, now buy, now sell. For this it's a buy, for this maybe it's a sell. So how am I supposed to take a decision on this candle or the next candle or the other candle based on all these indicators? So if you are a beginner trader, please do me a favor and simplify your trading, because adding another indicator, yet another indicator to your chart, it's probably going to be worse in the long run towards your learning and towards your trading career. On the other hand, let me cancel all these indicators. On the other hand, there is another misconception, which is that the pro trader... Okay, so now we have a totally blank chart, and well, it is encouraging, because at least I can see the price action, which at least make a bit more sense to me. But the other misconception is that pro traders can predict the market, always can predict the market just by looking at the naked chart. Why? Because, well, of course, it's written in the books, and we know the theory, which says that a consolidation, when it breaks to the upside, it will continue because it's an uptrend maybe, or maybe we have a wedge, and so the price will go that way. based on the theory, but unfortunately we know that the books and the theory are correct, absolutely correct, but then the market can always do whatever it wants whenever it wants. So it moves unpredictably, and so even by having all the knowledge of the theory, we need to always be able to understand what's going on in the moment. And so the theory is never enough. We cannot look at the naked chart and then say, okay, the market, since it broke this level, it's gonna go up, because we don't have the evidence just from the price action. So just by looking at the price action, how many times, for example, how many times we've been into a beautiful consolidation or a perfect wedge, we got into the trade and then the price hit our stop loss quite rapidly maybe, but that's just because the price decided to move the opposite way or decided to make some false movement or some weird movement, and so we got a losing trade. In the end, the wedge was perfect, the consolidation was very beautiful, and we got a losing trade. So this is not to say that the theory is wrong. The theory is absolutely right, and you should start from the theory, but then the market and the real market conditions are totally different. And so you should always take the support, the help of a few limited number tools, indicators that you trust, that can allow you to make a clear and simple analysis of the market. Because even the pros, trust me, even the pros cannot predict the market just by looking at the naked chart, because the market can always do whatever it wants whenever it wants. Okay, so let me just add a couple of indicators which I typically use, and you find many videos with these indicators in this channel. So this is just an example, and these are the indicators that I typically use. Of course, these are not the only ones. I have more indicators that I typically use, but let's say more than 50% of the times I trade with these indicators because I tested them over the years and I trust them blindly. Okay, so these indicators are the bottom stop signal and the RSI Exhaustion. If you want to test yourself for free, these ones and more indicators, of course, you find the link down in the description below. So what they tell me is where the market is going, and they show me, show me whether I am about to see a great opportunity or not. How? Well, the bottom top signal shows tops and bottoms, as the name suggests, of course. Okay, so bottoms, bottom here, tops, 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 bottom, etc. The RSI Exhaustion instead is kind of a regular RSI, but with exhaustion information added over it. So it means that in this case we have the RSI which is increasing and it is exhausted, which bullish exhausted because it's a green exhaustion, which means that considering the RSI is increasing, the price is increasing, it means that the price doesn't have too much room to go any higher, and so it will likely go down. When you add this consideration to the fact that the price here is flat around these tops here, and then the RSI at the same time starts dropping, because you see the price here is flat, the RSI goes down, which means we have divergence. So we have divergence first, we have exhaustion as a second condition, and then we have the tops. Well, this is a very clear, specific signal that the market will go down, and in fact it did. Now here we have another opportunity, because we see that the market is going down and it is forming these bottoms. Okay, so you see a first bottom, you say, okay, it's good, but I'm not sure about this one because it's the only one. I don't have any previous structure from the market, I don't have any evidence, so you just take it for what it is. But of course you don't trade this one, or at least I don't trade this one, then it's up to you and your strategy, but I don't take this one. But I look at what happens next, and as the market moves, I see that I got another bottom here. Another bottom here, the market goes down, but the RSI in this case goes up. Okay, it's a slight upward movement, kind of flat or a slight upward movement, but the price is significantly going down. The RSI goes in the opposite direction. So once again, we have divergence between the price and the RSI. We have exhaustion in the RSI. In this case, it's a bearish exhaustion, which means that considering the price goes down, the RSI goes up, slightly up. It means that the price doesn't have too much room to go any lower, and so this is a clear signal that the market will go up. And again, the market here goes up. And then if we move forward, we'd see that here we have a top. As I said before, I don't have any evidence for it being a very major top so that the market can continue to go down, and so I just wait. And I get another one, but then I look down and I see that the RSI is actually increasing, so there is no divergence. So I just ignore these signals, and I see another one and another one, but then the market keeps, the price keeps going up while the RSI goes up as well. And then what happens, well, let me comment on this because I see that the RSI here dropped very quickly. But while the top are almost the same, it is true, but to me these are very close to each other. And typically what I like to see are situations either just like this one where I have a nice downtrending RSI, but when two tops, let's say an opportunity arises like this one, and I have the RSI which is like going down like crazy, I typically don't trust this kind of movement. I much prefer to wait and see what happens next, because the typical downtrend in the RSI should be kind of like this, or maybe somewhat lower, but just not a vertical downtrend. This is more like a very short-term movement, and so you cannot reliably predict the market with a very short-term movement, because there might be some short-term volatility which gives you a false signal. You say, okay, the RSI is dropping way too much, so I'm gonna sell. No, you just need to wait and be patient, like we always do here. So we take only the best opportunity. If we don't see one, we just wait and stay patient. So what happens next is that the price continues to rise. So as you can see, we have a very strong uptrend here, but as I was just saying, the RSI goes down, and it goes down very nicely. But as you can see, the price goes up, the RSI goes down finally, and it means that we are gonna have a downward movement, because this is not sustainable. We have divergence, we have exhaustion, we have the tops, and so it means that the market will move down. Okay, and this always happen. It's always the same. And as you can see, with just two indicators, of course you should not use this one if you don't trust these ones. It's totally fair, but you should focus on the ones you believe are the ones that give you the clearer and most simple understanding of the market. But then just focus on a limited number of indicators, because the more you have, and the messier is going to be. And if you believe that with 0 indicators, just a naked chart, you're gonna predict the market, that's absolutely false, because the theory is one thing, the real market conditions are another thing. And as you can see, with just 2 indicators, the ones that I believe the most, I was able to take within like 10-15 days, I was able to take 3 very major significant opportunities. Of course, then you need to make the setups. So once you see these opportunities, you have to take some decision where your entry price is going to be, where your stop loss is going to be, where your target is going to be. That is the next step. So that is where your overall trading strategy takes place, and you find plenty of videos in our channel where we actually trade the markets. But in this video I want to make clear then you should always use a limited number of very solid indicators that allow you to have a clear and simple understanding of the market. Okay guys, so I hope you liked the video. If you did, let me know in the comments down below, and also like it if you did, and subscribe of course if you didn't already. And guys, I'll see you in the next video.